Hello, everybody. I'm Peter Grant with Zaner Metals in Denver, and this is This Week in Metals. Peter Thomas is with me as usual. How are you, sir?
We're all good. Very exciting week last week, but we stayed in the ranges that you and I talked about. So no real big surprises, and we kind of like it that way. Our hedgers got opportunities to sell
Yeah.
spikes like we talked about, and everything kind of fell into line last week.
Yeah, so a little bit of a mixed bag. Gold
Yeah,
ended the week down just a little bit, 0.4%. It was
right.
the second consecutive lower weekly close. And while we saw a solid retest of the upside early in the week, we sold
Right.
off pretty sharply, almost 80
2015
bucks.
on the OTC side. I mean, it just blew a lot of people away. That's a big number.
Yeah. And then, like I said, on Wednesday, it dropped like 80 bucks,
Yeah.
midweek sell-off. But all in all, we closed fairly steady on the week.
Yep. I mean, taking it. Remember, we're buying breaks. We're not buying rallies. We're buying breaks. Saying when you see 80 or $100 break, you might want to consider that as an entry point, right, Pete?
Yeah. And so we did get a little bit of a rebound on Thursday, and then
Sure did. Yeah.
softness on Friday into the close. But we're off to a pretty good start this Monday morning, and like we talked about last week, we thought that this corrective consolidated phase would probably continue for a little bit um,
Right.
before we see renewed tests above 2,000.
Well, I mean, there's there's four things really working against the gold rally, and the first one is the COVID virus, finding a vaccine to cure it, which would put a lot of pressure on the market. The second thing would be South Africa and California. Africa and California are now on the same plane in that they have the same amount of rolling blackouts in electricity. So what that means is we're if South Africa were working very hard to get their electrical flow up, it would indeed increase the amount of electricity. But right now they haven't, so that's okay. The dollar is kind of a mixed bag, but easier, which kind of puts pressure on gold on rallies and gives us a little bit of support when it dips. So we've got a lot of stuff going on. And then finally, we've got Turkey, which is in a gold buying. It's like a frenzy right
It
now.
is a
It's like
frenzy, yeah.
white sharks just eating a whale carcass. It's almost beyond belief. And so there's a lot going on the fringes of gold, and a lot going on as far as consumption goes, especially very interestingly, even though we're 4 weeks into lower lows in India, which used to be the number two consumer of gold. And whenever we have rallies, we see that die off because the Indians are very price sensitive to their consumption side. But we just saw them talking to Apple and Samsung about them moving in to India for manufacturing, along with the possibility of Japan meeting with them to do some consumption onshore in India too, which would be a massive consumption of gold, silver, rhodium, ultra high speed rare earths, things like that. That would be very interesting because it would break that Chinese chain.
Yeah, but do you think it's going to be an offset, or is it going to be additional consumption? Because my sense is, with trade tensions
Both,
still
both.
pretty high between the U.S. and China, that India has a virtually untapped workforce. I mean,
Yes, it does. Very well
and
put.
it's
And not only
huge.
that, a
They're
very well
highly educated.
educated workforce.
Exactly.
Yeah, yeah.
And so I think that if Apple and Samsung are having serious conversations about building plants in India, I think that's going to come at the expense of China. Um,
I think you're 100% right, Pete.
yeah.
Absolutely, yeah.
So so it might not be a big add to consumption, uh, when all is said and done, when
Well,
this.
let's put it this way. It's consumption that's going to be dipping down due to a number of things. First off, tariffs put some pressure on it, but it obviously didn't slow down the price of the Apple stock. It's been doing quite well.
Oh yeah,
But if they in turn are able to produce more with a non-slave base, if you will, I think you'll see more people consuming their product.
great. Let's move on
Yeah,
to silver. Silver actually had a
sure.
really good last week,
Boy,
a
it did,
really
didn't
good
it?
week, up 1.27%.
Yep.
Um, so again, that ratio remains under pressure, and I like that.
High of the high in OTC, by the way, Pete, where you were was 28.45. Big
Wow.
number. Rallied up there and just scared the heck out of a whole bunch of people because they thought we were going to take another run at 30.
Yeah. Yeah.
Hmm.
So I like the action in silver in the sense that it's been, mostly contained to the upper half of the big range that developed, during the big sell-off
Sure.
in early August. So the range that
The
formed
five
in
dollar
early
break
August.
was pretty scary.
Yeah,
Yeah.
yeah, indeed. And so we've seen some dips briefly below that retracement level, the midpoint of the range, basically. But there
Right.
seems to be buying interest on those dips, and it pops right back up. So generally
That's
speaking, I
good.
like the action in silver, and I think it's
Yep.
pretty reasonable to anticipate another run at $30. I don't think you make one run and that's it. I think it's got to go up and at least test it again.
Well, if you remember on this show a while back, I said, "Hey, we're going to have a $5 break in silver and hang on," and it went right to it. So we got lucky there. But the thing is this, and you as our technician for metals here will point out that you have to base before you get a rally, and as long as it's holding this 25, $26 area, I think it's trying to base even though the volatility has been dramatic to say the least,
Hmm.
it's still staying in a range which is giving it basing potential.
Yeah, yeah. So
Okay.
we'll continue to see that. One thing that I saw an article that India was actually exporting a fair amount of silver. Um, so consumption, remains under pressure. Both gold and silver consumption remains very
Right.
weak in India. Again, as you mentioned, they're very price sensitive, very very savvy,
Yes, absolutely
um,
right.
and price sensitive. So, um, but they're exporting it. I think
Well, the
primarily
problem
to.
with that, Pete, is that right now exporting, I mean, even though, let's say, for example, some of the people that we're affiliated with, that we do storage with, have what are referred to as umbrella or blanket insurance policies. So the insurance cost on moving silver really hasn't gone up that much. The problem is that the with COVID, the cost of most silver shipping now has more than doubled. So you can have all the silver you want if it is prohibitive to move it from India, to move it from different places in Asia, to move it from Peru without large margin increases. That's what we're seeing right now.
Mhm. Yeah, we've definitely seen increases in premium
Yes,
to kind of
absolutely.
offset some of that additional expense.
Offset the cost, sure, sure.
Yeah.
So the thing is that, you could bring as much as you want to the market, but you gotta ship it. And if
Hmm.
if it's too expensive to ship it, and you gotta put a big premium on it, it's gonna slow down a lot of markets, including the American market as far as consumption goes. And even Jim, the director of US Mint said, he says, "Look, we have some silver, we have the ability to make product, but we don't have the supply chain." And a lot of people are saying, "Oh, the U.S. Mint is out of silver, and there's no, they're never going to find it anymore." It's not the case. He came out directly about a week and a half ago, with a very lengthy description of what the problem was, and the problem is this: they just don't have the manpower to move this stuff, and that's, I think, pretty global right now.
Yeah, I think that here we are, 5 months, into the COVID crisis, and
Right?
we all recall the supply chain disruptions that
Sure.
occurred in March and April that caused premiums to skyrocket, and supplies were tight to non-existent. And I think the market is
Yeah.
still reeling from that to a large degree. As
And I think, Pete, you need to point out too that it's going to stay that way for a while. We talk about that all the time. Just because you flip the on switch at the mine, it still doesn't get refined for a while. It takes a
Yeah,
while to go through the whole pipeline.
right. So when you get the opportunity to buy your silver when there is available inventory,
Yeah,
take it.
do absolutely stay up with the Zaner Precious Metals site, because when we get product in, it's there and it's going fast.
That's right. Platinum was down almost 3% last week,
Yeah.
but palladium was up a little bit over 3%. What do you think's going on in the PGMs?
Well, for our scrappers, all our guys that follow us out there that are running AutoCADs and running product and running Palladium, we said 2,200 is going to be your sell area. You see it up there, you see a spike. Maybe it's a good time to cash in some of your inventory, put that profit into your business. Ran right up there and then just fell on his face again. Sell spikes, I'm not changing that at all. It's in a trading range. Use the trading range to your advantage, guys. Anybody who's delivering metal, if you want to call us, we'll give you a hand getting that together, because that's what's going on, Pete. I think we're seeing it again, a trading range, an established trading range. Sell those rallies, and conversely, if you're a net user or you are a speculator, you might want to consider buying breaks.
Yeah. My sense is that so the U.S. data last week were generally pretty good, and
Yeah, I thought so too.
Most of it was July data, but we're seeing a lot more positive data out of China. Always,
Okay.
uh, you know,
Their stock market hasn't been as bad as it could have been.
yeah,
I agree with you there. I think the housing starts and the housing sales, we have discussed this many times for our people. Your average apartment, they'll put about 40 pounds of copper in. You can go up to 400 pounds on a large house. So when you see big numbers like that, you're seeing rehab, you're seeing metals going in, you're seeing good consumption of copper. Copper staying in a heck of a strong trading range. So I agree with you. I think
yeah,
there's a lot of good symbols out there. They're pointing for a
yeah.
stable market at this
You
level.
know, I think the global economy and the U.S. economy are trying to get back rolling, but it sort of
Yep.
fits and starts,
Yeah.
and so I think that there's opportunity there. I think that we are going to come back from this, and when that happens, demand for AutoCADs and for copper are going to be I think that there's a big backlog that's built,
Hey, and let's look at something that came out this morning, which was Ford. Ford came out and said they're expecting their 2021 electric pickup truck sales to be out of the park. They were absolutely stunned by early indicators of demand, and it makes a lot of sense. If a guy can get an electric pickup truck, drive to work, put it on a charger while he's at work, and I'm sure the work sites will put something together so the guys can be charging trucks and when they're using them. I mean, you're cutting down pollution, you're cutting down the cost for your employees to get to work. I mean, all kinds of positive things happen from it. And we double or triple our consumption of copper from that. So that's another good support point. And also, by the way, our cobalt has gone up 14% in the last month from our recommendation on the Matt Justice Show. And if you recall, anytime you see a lot of cobalt moving out, the only thing that's going to move the energy stored from that cobalt in the batteries is copper. So everything is pointing to demand right now.
Right. And so copper ended up 2.4% last week.
That's
It
bad.
set a new 3-year high at just shy of 303, which was an important retracement level that we both made note of.
Yeah,
That's 61.8% retracement of the entire decline from the 2018 high to the March
that's
2020
interesting.
low. So that
Okay.
comes in at 303.80. So that's
Beautiful.
the next
Boy,
level on the
that's
upside.
just about where we went, isn't it?
Yeah, yeah. Well,
Yeah.
yeah, we went to 302.77. So that's the
Thank
high of the
you.
spot market.
That's as
That
close. I mean, can you be any more accurate than that? I mean,
um,
come on. That's
I don't
that.
know,
I mean, I'm looking.
another penny,
Yeah,
another
I
penny,
did. Oh,
302.78, would have been better, but whatever. But that
okay.
market
Well,
still looks
you
good.
know what? Yeah, it still looks good. Hey, what have you got on the chart for this week? Anything, any critical numbers coming up, B?
We've got housing prices, both Case Shiller and
We got Schiller. That's
FHFA.
right. Okay.
We've got durables
Okay.
on Wednesday. Market
Durable goods
expectations are
on Wednesday. Okay.
plus 4.1. So a good number, but
Nice number. That's a
remember
good number.
it was 7.3 in June. So things are slowing down a little bit, but still a really solid number. We'll
It's
get
on the
our
plus side.
Yeah, we'll get our second look at Q2 GDP on Thursday.
Interesting.
It's a little bit better. Preliminary was minus 32.9%. So now they're saying maybe a revision to minus 32.6.
Okay.
Um, a little bit of a surprise on claims last week in that it went back above 1 million. So people were a little bit
Yeah,
concerned
that
about
is a
that.
critical number. I'm glad you pointed that out. Right.
Yeah, and so they're expecting another million plus 1.04 million is the expectation for this coming week,
Okay.
this week's claims number. And then we have personal income and PCE on Friday. So personal income minus 0.5 is the expectation, and personal
Great. Thanks for that, B.
consumption,
We appreciate
yeah,
that.
plus 1.5 on PCE.
Okay.
So again, still positive consumption numbers, but not as elevated as we've seen in recent months. So that's our
Okay.
outlook for this week.
For
Um,
this week, yeah.
yeah, and
And the parameters have been laid out for our scrappers. You know what to do if you're concerned about stepping into this stuff. We'll show you how to set up for your hedging here. And people who want to buy precious metals, you know where we are, ZanerPreciousMetals.com. We do have some inventory coming in. Hopefully, we can help you. Our wholesalers, hey guys, you got to start hedging. These wild spikes are going to be very, very expensive for you if you're holding material in the box. Let us show you how to do that.
absolutely. And give us a like, give us a follow,
Yeah,
so this goes right to your
yeah,
inbox.
absolutely
With
right.
that, have a great trading week. I'm Peter Grant with Zaner Metals in Denver.
Pete Thomas, downtown Chicago in the financial district. Zaner's been here for 40 years, and we intend on being here another 40 years. So stick with us, guys.